Hi, Else here. Just what are the different types of business entities and exactly what are the pros and cons of each? The three most common forms of business organizations are proprietorship, partnership, and corporation. Many businesses start off as a proprietorship or partnership, and as they grow, they may choose to become a corporation because of the benefits of the corporate structure. Proprietorship is a business owned by one person. There are many benefits of the proprietorship form of business. It's simple to set up, costing between $60 and $100 to register provincially. You can start with very little money. I started my own business with less than $5,000 of personal savings and no debt. The owner has full control over the business. They make all the decisions in answer to no one but themselves and their customers. And their creditors if they happen to borrow money. There are also drawbacks to a proprietorship. When the owner dies, often so does the business. Any profits from the business are reported on the owner's personal income tax return, and they're taxed at personal income tax rates, which are often high. Finally, the owner has unlimited liability. What does that mean? It means that the company and the owner are not legally separate. If a customer, supplier, or creditor sues the company, the owner is being sued personally. If the company has debts, they're considered the personal debts of the owner. The owner can lose everything owned by the business, but also all of their own personal assets, including their house, car, and personal savings. Unlimited liability means that a proprietorship is not a separate legal entity from the owner, but the accounting records of the business are totally separate from the personal records of the owner. What does that mean? Well, if the owner of a business has a car for personal use, that car will never show up on the business's financial records. Proprietorships are the most common form of business organization. Every 2 years, there's approximately 500,000 new startups in Canada. Many of the businesses you see every day are proprietorships. A partnership is an unincorporated business owned by multiple people. The advantages are very similar to the proprietorship form of business organization. An additional advantage is that there may be more startup capital available. That's because each partner brings their own cash to the partnership. In a partnership, the partners share in all the decisions and profits based on the partnership agreement. Partnerships have similar disadvantages to a proprietorship. One serious additional disadvantage is that the debts of one partner are also the debts of the other partners, even if the other partners didn't know about the debt to begin with. Similar to proprietorship, although the business is not a separate legal entity, the personal assets and obligations of the partners are never reported on the partnership's financial records. Personal and business records are kept totally separate. Partnerships are another common form of business organization, particularly for service businesses, kind of like accountants. Partnerships can grow to be very large. For instance, the accounting firm KPMG is a partnership and it's globally recognized. Corporations are businesses that are incorporated under either provincial or federal law. They are owned by shareholders. There are many benefits to being a corporation. The main benefit is that the corporation is a separate legal entity. They file their own tax return and they can be sued. This means that the owners have limited liability. They can only lose whatever they spent on their shares, never their personal assets. Because ownership is separate from the business of a corporation, the life of a corporation can go on forever. This is because transferring ownership means selling the shares to another owner. This also makes it much easier for a corporation to raise money. They can simply sell shares on the stock market. Finally, a corporation pays corporate tax rates, which are often significantly lower than the personal tax rates paid by proprietorships and partnerships. There are also disadvantages to corporations. They're complicated and more expensive to set up and maintain. There are many regulatory filings to consider. Finally, if you own a share in a corporation, you don't make the decisions and you don't get all the profits like in a proprietorship or partnership. Ownership and control are totally separate in a corporation. The board of directors and management run the corporation and make the decisions. The shareholders are totally separate from the running of the company. There are two types of corporations, public and private. Public corporations are ones like Canadian Tire. Private corporations are ones like McCain Foods. Public corporations sell their shares on the stock exchange like the TSX, the Toronto Stock Exchange. Their financial statements are available to everyone. They're published on the web, and there can be thousands or even hundreds of thousands of shareholders. This means that anyone can own shares in something like Bank of Montreal or Royal Bank. Since you can invest a small amount of money, your risk of loss is low. There are over 4,500 public companies in Canada today. Private corporations can be very large, such as McCain's Foods, or they can be very small. private corporations do not have their shares available to the public. Because of this, they often have a hard time raising capital to expand their business. A private corporation's financial statements are never made public. You, as an individual, will never be able to see the financial statements of McCain Foods. There are over 2 million private corporations in Canada, and they can be very large or very small, with many private shareholders or as few as 1 or 2 shareholders. So, let's check out how well you understood the different forms of business organizations. Remember to pause the video and come up with your own answer first. The majority of restaurants in your neighborhood are most likely to be. Actually, a restaurant can be any type of business. Chains like McDonald's are corporations, but some are partnerships and other proprietorships. For instance, the Thai restaurant around the corner from me is a proprietorship, and the fish and chip place, it's a partnership. Corporations will be the focus of this course. Does that mean that an accounting course that covers corporations is useless for anyone else who wants to start their own proprietorship or partnership? Absolutely not. Remember that the accounting records of any business must be kept separate from the owners, regardless of the form of the business. Accounting for any type of business is basically the same, so the content of this course is applicable to anyone who is interested in learning about accounting, regardless of the form of business. This will help you to make decisions either for your own business or the business you work for in the future. So, why is it important to learn about the different types of business organizations? Because you may one day be one of the 250,000 individuals who start their own business every year. Knowing the different types of business organizations out there, their advantages and disadvantages, can help you to make an informed decision in the future. In the next series of videos, we'll be covering the different types of business activities.